You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the vol market? Well, I guess let's find out together, shall we? Because it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you have been binging all week long. Hope your trading week is going well. Remember, if you're just listening to Vol Views, what are you doing? I know this show's been running for over a decade. It's got quite the long-running fan base, but you're missing out on nearly a dozen other programs that are hitting you throughout the week. So make sure, you upgrade to the full network if you're one of our many new listeners who maybe just discovered Vol Views for the first time. We see you out there. Welcome to all you folks out there. B, if you do like what you hear, you're one of our long-running listeners, throw a star, a like, a comment, wherever you get it. It could be iTunes, YouTube, Audible, wherever the heck you get this show. It's available pretty much everywhere podcasts and audio programs are available under the sun. Whatever your platform lets you do, including our mobile app, you can throw some stars that way. We all know there's a massive influx of people discovering these markets. They need a place to turn. Again, we have a long back catalog of reviews, but the algorithms like the new stuff. So if you like what you hear, throw some stars, a like, a comment. It does help new people continue to discover the program. And of course, this is our final program on the broadcast side for the on-demand folks. If you want to keep the party rolling, you want to join us in a little bit for options oddities, as well as you want to check out the great pro Q&As, a lot of great pro Q&As, delving deep into the world of volatility recently. Only one place to go, theoptionsinsider.com/pro. If you get in there now, you could join us ahead of Options Oddities coming up a little bit later today. And, of course, you get access to 250-plus episodes that are already up there. So a lot of listening ready for you the second you hit that button. Of course, live streams, giveaways, all sorts of fun going on. theoptionsinsider.com/pro. As we go around the horn and see who's joining us on the old Volatility Views program this week. First, let's go back to the Southern Volatility Mecca. Just last week, it was the home of the Risk Management Conference. Our guest today, still recovering from the massive vol party that was on his doorstep last week. He is the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com. Mr. Meatball, welcome back to the show. Have you now fully recovered from the soiree that was RMC, sir?
Yes, and I have recovered well. I am fully recovered.
I'm glad to see the rodeo bull didn't toss you too hard, sir.
Yeah, I actually skipped the rodeo.
You skipped the rodeo?
Unfortunately.
Oh, you missed out on that part. I want to see pictures of the Flowmaster doing it. I heard he was having a good time out there in RMC. And then also joining us in the old guest hot seat this week, it's been a while since he's been on the program, since way back in the heady days of January of 2021. What was going on back then, listeners? Oh, I don't know. A little bit of a meme stock thing popping off. Everyone was obsessed with some name called GameStop. Never heard of it myself. So a lot has gone on in the interim, but we are joined once again by KRIS SIDIAL, the co-CIO over there at the AMBRUS Group. KRIS, welcome back to Volatility Views.
Hey, thank you so much for having me. Yeah, it's been a while. It doesn't feel like that long, but I guess it really has been.
Yeah, I think you joined us way back in one of the early NASDAQ runs, and yes, it has been quite a while. So obviously, a lot has happened in the markets. Also, a lot of new people have learned about and discovered the world of volatility, and indeed this program since your last appearance. So let's start there. Give all of our new listeners a quick overview on your background in the vol space, as well as what it is you do day to day over there at the AMBRUS Group.
Yeah. So I actually started out almost a decade, actually a little over a decade ago. I learned how to trade vol under Bob Cantor, who is actually sort of like a legend on the SEBASTIAN. One of the older school guys that started in the pit. And then I went on to trade prop. I traded prop at two different firms, Chimera Securities and Xanthus Capital. And then I made my way to BMO Capital Markets, where I spent 3.5 years there. And most of my time there was spent trading exotic derivatives. So pretty fun to be trading that stuff. And then myself and a couple of partners who are ex-CTC, ex-Citadel guys, we branched off and we started this TAILRISK hedge fund, and that is AMBRUS. And, when you traditionally think of tail risk hedging, people just think of, buying puts and losing money consistently. And that's really not what we do. What we do is very different, So our approach is more so a carry neutral tail risk hedge. So, we use a lot of short-term active trading to offset the bleed. So, an easy way for viewers to think about this is our goal is to be flat during normal market environments. But in a scenario, if you get, let's say, VIX going up 50, 60, 70, we're trying to return like 200, 400%, right? These really, really large returns. And really, when you think of this, it's really a long convexity book. And people come to us because it's a pretty effective way to hedge off the other side of their portfolio. So we have, investors that are vol traders. We have investors that are foundations, fund of funds, family offices, right? So it's a very niche area of the market, but we are the odd tail risk guys.
I love talking tail risk. I mean, I've lost count really of how many guests have come on the network over the years who all have a different way of talking about tail risk. You ask 10 different options traders, what is tail risk hedging? And you might get 10 different answers. I had one guy come on, I remember years ago, pitching a tail risk fund. And his notion of a tail risk fund was, I think, 95, maybe 99% cash, and then the rest of the allocation in out of the money calls in the SPX. And that to him was a tail risk fund. And I was like, really? That's tail risk, huh? But yeah, it's such a subjective term. What does it mean? It's not just buying teeny puts and letting the dice fly. It's almost anything in between I've heard described as tail risk. So yes, a very fascinating area. I'm sure we'll get into it some more as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everyone, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives, and yet another fun week out there on the vol front, with the market once again kind of struggling to find its footing, find its identity going into the end of the year. We, of course, saw a lot of red on the screen in the latter portion of the week. And then coming into today, it seemed like, well, maybe the market might be struggling to go a little bit green. And we had some moments there earlier this morning. The S&P got up to right around that 41.5 level that everyone seems to fixate on, then kind of gave up the ghost from there. And now we've mostly been selling off. As the day has progressed, we have headed into, right as the start of the show, we had the S&P off right around almost 0.5%, about 0.45%. The Dow off almost a full percent, about 0.9%. The NASDAQ clinging, I should say, to green, up about 0.4%. If the inertia continues this way, that'll probably dip into the red pretty soon as well. So it seemed like the bulls had their way for a little bit, and vol was actually starting to retreat. And now that worm turning and vol starting to get a little bit frothier again heading into the weekend. Of course, a lot of things buffeting the market these days. A lot of earnings coming out. Earlier this week, we had some big tech names coming out. Microsoft and Google, certainly the AI vanguards out there. Very much two different stories from an earnings perspective. And then last night, Amazon knocks the cover off the ball. Well, at least partially, I suppose you can say, because initially they were crushing the stock. And then I think it was the COO had to come out and kind of talk things up about their cloud business in AWS. Then all of a sudden, the market grokked it and it turned around, and Amazon, one of the few names that is still up, managing to carry the NASDAQ north. It's up 9 handles right now, so I don't think I'm going to give up that. I'm going to end up red on the day. That would certainly be something. But all that a long way around to saying a lot of different forces buffeting the market right now. Of course, the market got spooked earlier this week as well by the strong numbers coming out of Q3. So that, of course, that kind of growth means the Fed may not be sitting on their hands from a rate increase perspective going down the road as well. So a lot to digest this week. All that coming into VIX back north of 20, a little bit north of 20, though, about 20.3 as we kicked off the show, up about 0.6, down 0.6 of a point. We were almost at a 21 this time last week. So this time last week, you had a little bit of a Loggins joining us on the show. I'm not sure if he's going to make a guest appearance this week. I know that may disappoint some of our longtime listeners. Usually the cutoff for the Danger Zone listeners is around a 25. We snuck him in last week around a 21 just for fun. I don't know if we can keep doing it, though. It cheapens the appearances of the Loggins. VVIX, though, looking frothy. That's screaming a little bit of Danger Zone there. 115 for the vol, up 11 points from this time last week. So once again, vol looking frothy, at least from a vol perspective. So a lot to unpack. Kris, as I mentioned, you haven't joined us since the beginning of the meme stock day, so I don't expect you to take us all the way that far back from what's gone on in the vol market since the last time we chatted. But certainly a lot going on in the last few weeks and months, certainly post-Powell, a lot going on in the vol space. So what's been catching your eye, post-Powell and indeed this week from a markets and from a vol perspective over there at the AMBRUS Group?
Yeah, so one thing that's interesting is if you look at 1 month S&P realized vol, it's finally starting to grind higher. All right, we were in a pretty long time period where realized vol was just dead, and you're finally getting that slow grind higher to roughly about 14-ish now. The second thing that I think is interesting is that, if you look at tails and you look at the vol locally and tails outright, for the first time in a really long time, they have a slight bid. SKEW doesn't really tell you the full picture as to how the market is thinking about risk, but locally in the tails, they're holding a little bit of a bid, right? They're not really exploding or anything like that, but you're finally getting a little bit of stickiness there. The other thing is that in order to keep vol sticky here and really float around, the market is going to need a little bit of a catalyst to push it through. It's going to be tough to keep vol elevated at these levels without some sort of a headline to really get people, going. And I think the conversation that has really been floating around is, well, look at how wide that VRP is. If you look at something like, let's say, VIX to 1 month S&P realized, and you look at that over the last, let's say, 7 years, that's in the higher range. That's in the 85 percentile range, right? So people are like, well, that VRP is quite wide. But it's important to note that the VRP doesn't really state directionality. And that's really, really important, right? So if you look at that now, that's roughly about 7 vol points wide. And take an environment like 2017. All right, you look at 2017, which was very notorious for short vol across the board, right? An overcrowding of short vol exposure. And you look at that, and there were times where, VIX was at 10, 11, and S&P realized was at 3, right? 7 vol points wide-ish or so. So I think what we're seeing right now is really this overcrowding of the short vol trades that's kind of made its way back in really big size. over the last 4 years. And it's crazy to think that it's been almost 4 years since we've had a real big, blowout in vol. And, if you are one of these sort of like systematic vol sellers, you've been able to just sell vol close and make money, right? And I think that is something that continues to intrigue us, when we talk to different brokers on the floor and kind of when we look at flow, it's like people are like, well, why is vol really not going higher? And it's really because every single day you kind of get it offered up. So it amazes me that size of that trade continues to balloon bigger. Now, it's not as obvious as 2017, right? Because when you think of 2017, you're like, well, everybody knew there was chunks of vega notional in, those ETPs, right? But today, because you have so many different tenors, right? Like the exchanges have listed so many different tenors, and you have, so many different options in terms of how to express a vol view. It's kind of spread out, but it's kind of the same trade. So, that's one of the things that we keep an eye on is just how much short vol exposure is kind of lingering out there, and how sluggish vol has been in the face of all that.
A lot to unpack there, Kris. First off, for all of our listeners who don't speak vol acronym, VRP, of course, Volatility Risk Premium listeners. So, of course, the implied versus the realized out there. But a lot to unpack there, Kris. I'm curious, you mentioned that SKEW doesn't tell you the whole story. Obviously, a SKEW, a big indicator for a lot of our listeners out there. They like to analyze it and crunch the numbers. We talk about it on a variety of different shows, and we're talking about different products out there. But I'm curious for you, what else do you use to really give you a sense of what's going on in the tail? Is it the SKEW plus the volatility risk premium? Are you just looking at the straight far, let's call them the teeny puts, and see what's going on there? What is your preferred measure of tail risk?
Well, when you're thinking about tails, I think you have to look at it on a floating strike base, right? So you could say, okay, from a vol standpoint, if I look at and I'm just trying to keep it super simple, let's say a 5 delta VIX call. What has that looked at from a vol standpoint historically? Or you could just say, well, let's go at a 10 delta S&P put. And what has that looked like from a vol standpoint historically? Or you could think about it in premium terms too, for those who may not really be too familiar with vol conversion directly. So I think that gives a cleaner picture, because this is kind of a problem that I've had with looking at SKEW. You could have something where, let's say, you're comparing the at the money. So let's say you compare at the money put to a 25 delta put, right? And let's say the vol is on the at the money put is 10, and the vol on the out the money put is 15. And then let's say now vol goes to, the at the money put goes to 50, and the out the money put goes to 51. Now, vols have jumped, locally insanely higher, right? But yet that sort of measure would tell you, well, SKEW is quote unquote cheaper. It only gives you one sort of a view there, which is not really entirely representative as to what's transpiring from a direct vol standpoint. So that's kind of why it's important to make sure, if you're looking at SKEW, make sure you kind of also assess a couple of other things too.
It's funny you mentioned that because we discussed that a lot on the show, particularly last year. We used to joke that last year seemed to be the year where everyone discovered en masse we referred to as the garbage or the junk calls in VIX. We saw a bunch of, pars and above calls lighting it up week after week out there. And we actually back tested some of them, and you're right, they can perform surprisingly well sometimes in bizarre situations. So it seems like last year was the year of junk calls in VIX, and indeed junk puts in SPX.
Yeah. I guess you could say that. I think that's one thing that we look at, but there's a couple of other things. We look at like outstanding vega notional that's out there, right? And we try to back into the netting effect of that from like a directional standpoint. So it's one thing to be able to say, okay, there are, 100 options. I'm just using 100 for easy math for people to be able to kind of follow through. But let's say there are 100 options that traded today. It's important to understand the directionality to that, right? Or at least to have a little bit of an assumption as to where the directionality towards something like that stands. If you have 100 VIX calls, let's say 30 VIX calls for the NOVA expiration, is a very different picture if you say, well, 80% of those were bought to open or sold to open. And we try to do sort of, like positional modeling that's based on things like that, because that kind of gives you an idea as to what the vol landscape is currently doing from a positioning standpoint. Also, I know this may not really be as helpful for some of our retail listeners, but kind of being in contact with some of the brokers, when they shop across trades, it kind of gives you an idea to know, what really is going on out there. So if, we wake up and, we get in front of screens and we have brokers shopping around, let's say 10 orders to sell a ton of SPX puts, well, it's going to give us a little bit of a directionality. People are probably selling vol this morning, or vice versa, right? People are looking up, that, well, vol is a better bid. So it's things like that we kind of look at when we're looking at the vol landscape.
Always good to get the shows. That's why we're here, listeners. We try to give you the show every week here on Friday. Mr. Meatball, a lot to unpack there. First off, do you agree with Chris's comments that SKEW maybe not giving you the whole picture out there, what's going on from a tail risk perspective in particular? And then B, sir, what is catching your eye out there in yet another volatile week for the markets?
Yeah, well, one of the things that I think has changed SKEW is the zero GTE phenomenon, right? You don't need to worry about, long-term crash protection, because you can just go in and buy, the market just flipped 30 handles. I'm just going to go in and buy a couple of cheap puts for today, and then if the market really gets away from us, I'm protected. And the other thing, SKEW doesn't really tell us the whole story, because it just, those far out of the money puts have not, traders come in and try and sell that. And when vol goes up, the bid for those out of the money options does actually go up, but at the money vol increases so much that it looks like SKEW is flattening, when in fact it's the whole curve moving up, and maybe just that at the money, because it's got more vega, is picking up more. So I'm with him. I think he's hit the nail on the head.
And what was catching your eye out there in another turbulent week in the market, sir?
Well, they tried to rally things today, and now we're down. We have been down all week. VIX is starting to get a little frothy here. This spread between realized and implied, I don't know how long they can hold it up. I'd love your guys' opinion on this, but the VIX futures are, the VIX is 21. VIX futures are backward, and SPX realized volatility over the last 10 days is 14, and over the last 20, 13.68. That you could drive a Peterbilt through that hole. It's got to close at some point. And, is it going to be vol collapsing, or is it going to be a multi-standard deviation event that justifies vol where it is?
Well, Chris, you mentioned you're a big fan of the VRP, as you call it out there. So as Mark is curious, I'm kind of curious as well. Do you think we can maintain these levels for a while, or do we need some other massive event to really turn things around?
No, I kind of think that you need a catalyst. There's a lot that's floating out there from a macro standpoint, right? But one thing about vol is that, or especially in this environment, because this spot vol beta has changed tremendously over the last 2 years, right? And what you see is vol could be much more reactive to the upside and much more reactive to the downside. That's why you get those really, fast VIX crushes as well. And the important thing for people to understand is really to get vol moving to the upside, you need the market to grab onto a catalyst, whether it's something like, the market believes, and it's not going to be inflation. I think that's the important thing for viewers to kind of, get out of their heads. It won't be, inflation. Maybe there could be something like, Fed raising rates may cause a knock-on effect from, somebody being forced to deleverage positioning that lead to equities sliding lower, right? It could be something like that, but outright inflation going higher, the market is kind of normalized its reaction to that, right? So I'm not saying the market can't go lower on that, but you're not going to get VIX going up 40 or something like that on, in inflation, slowly creeping up. So I think it really needs to be a catalyst that the market grabs onto to be able to keep vol elevated. But the thing that I would say, historically, when you have looked at where things get dangerous, they're roughly around this type of VIX level, because sort of what you get is more so like an overconfidence. And I think an easy way for viewers to think about this is almost when you think of the behavioral reaction that goes on in short squeezes, right? Just forget vol and think about like a short squeeze in general, right? You'll get a stock that will go up and then it will kind of float around and people will say, oh, this is too high up, right? And it'll kind of stick around and grind around. And this is what you kind of call like collecting, right? So it goes up, it collects, it traps people, and then it takes a huge leg higher that is really led from people sort of deleveraging, their shorts exposure. And you can think about vol in sort of the same way, where it's like it goes higher, people have been rewarded, for a couple of years, just being able to sell vol blindly. They'll come in, vol will stay sticky. They'll be like, this should go down. And then as it goes higher and higher and higher, you get one guy that kind of pukes up exposure, and then everybody's like, whoa, exit doors at the same time. So I know, that's kind of a lot, but I do think you need a catalyst to keep vol to stay up higher. And I think if you do get that catalyst, you'll see vol react much more strongly than people are kind of thinking and can react, right? You have people that are sort of in the camp that like VIX is dead, because they don't really understand mechanically how, VIX gets priced. So that's kind of my long-winded answer there.
Well, you mentioned 2018 earlier. You're right. We are a long way removed from Volmageddon, so people have a short-term memory sometimes in the vol space. They forget what VIX can do to the upside. But we know maybe we're even guilty of that on this show. We have lamented many times, just recently even, how whenever we get any sort of VIX upside, it is for the most part very short-lived. So a lot of our listeners, a lot of the traders, a lot of the guests on the show, whenever they have any VIX upside, you have to unload it very quickly. The amount of time to capture that alpha to the upside is very short. So a lot of people have that baked into their brains as well. They get any sort of VIX movement to the upside, and they're dumping their calls wholesale. They're not sitting around waiting for VIX to move, let's say north of 30. So yeah, a lot to unpack there. Speaking of things to unpack and talking about the term structure earlier, let's get out there to the vol futures right now. And again, things very fluid in the market. When we kicked off the show, listeners, we had the futures out there actually still down slightly. The no future coming into the start of the show was down about 1/4 point from where it was this time last week, and the D's future down about a similar level, down about 1/4 point. If I re-rack those right now, listeners, almost halfway into the show, actually about a little over halfway into the show now, we are seeing obviously that the dark side continuing out there on the street, so vol getting a little bit frothier. Those futures have swung about 3/4 point or so to the upside now. So again, a little bit frothier, a little bit more juice out there on the term structure front. Kris, we were just talking about SKEW. We were just talking about volatility risk premium. How big of a part in your analysis does the vol surface play, and what, if anything, are you noticing out there right now?
Huge. I mean, it's big. We track, we track everything from the VIX futures term structure to the SVIX surface, single stock surface, and it's everything in U.S. equity market related. We're looking at different term structures from a relative value standpoint to just understand what the market is saying. And one thing that I think is interesting is we've been getting this in the VIX futures term structure, we've been getting this backwardation to contango floating around. So we really haven't had much of a push through in either direction. And I know some people just look at backwardation from a month one over, month two standpoint. But what we do is we kind of bake out what we call a weighting. So we'll take the weighting of the 2 front month futures and bake out what the calc should be, right? Because if you just have you're 2 days away from VIX expiration for that front month, and that front month is, high, it doesn't really mean too much, right? If there's 2 days to expiration, when you're thinking about backwardation to contango. So you kind of have to bake out a little bit of a weighting calc into there. And over the last few months, over the last few weeks, you've kind of been getting that floating in and out of backwardation to contango. And, I think that that's an important thing because it's showcasing you what vol is doing or, really what vol is saying. And I think that you've seen that sort of crowd, the short vol crowd kind of make its way back in a couple of times where it normalized and then, kind of came back, pushed its way into backwardation. So these are sort of signals that are firing off, I guess you would say, to maybe warning signals. So that's one thing that I find interesting, how the VIX term structure is floating in and out of that backwardation to contango so rapidly over the last few weeks.
Some warning signals floating out there in the term structure. Mr. Meatball, same question for you, sir. What are you watching out there in the term structure? And you also seeing some warning signals being flashed by the VIX futures right now?
Yeah, the VIX futures term structure is not happy. It's been fluttering between backwardation and flat for a week straight. VIX is now over 21.25. The November futures trading above December. The last kind of shoe to drop is if December can rally over Jan. There's still a nice 65 basis point spread there. But today looks like another nice ramp in vol. Wouldn't be surprised to see the November future break 21 at some point today. The Dow's now down 1%. And people are running for the exits into the weekend right now all of a sudden.
That'll be the question. Can Amazon keep the rest of the market afloat? That's a lot for one name to do out there right now. As we keep on rolling, let's get on out to the land of VIX options. And, might surprise you listeners, we've been talking about how much paper going up in VIX land for the last couple of weeks. This time last week, the ADV out in VIX land was right around 950,000, so threatening 1 million contracts a day in VIX. If you've been listening to this show for a long time, that's probably not a sustainable level. It takes a lot to put up roughly 1 million contracts a day in VIX. You need a lot of other things going on to really drive that engine. And that was the case this week, retreating off that a little bit, coming down about 40,000 contracts, right around 906,000. Still, obviously, a heck of a lot of paper out there in VIX land. But this week, a little bit lighter. Maybe also goes to show you the fact we've seen many times with VIX when, the first week when you see those shocks out there, you see a lot of paper as a result. Second, third week, once the market's been swinging for a little bit, those next moves not quite as shocking, not quite as big from a volume perspective. That's pretty much what we're seeing play out right now. VIX today, even though we are in the middle of what looks to be yet another whipsaw out there, VIX not really responding, at least so far. 389,000 contracts on the tape. That'd be a lot for July when the ADV was fairly anemic. These days, when we're north of 900K, not as much. The ADV, like we said, also coming down in the wrong direction. Let's look at the top 10 size positions. What's open for size in VIX options right now? Let's all find out together, shall we? Once again, there are only 2 puts to be found in the top 10. So if you're coming to us looking for a whole bunch of put paper, you come to the wrong show, and you have come to the wrong show for many months now because there's no puts to be found in VIX land, at least not for size. Number 10, 198,000 of the D's 25s. That kicks us off, listeners. Number 9, 211,000 But we're already back at it. The March 47 halves. They didn't wait long at all this week, listeners, for the fun strikes to start sneaking in there. Number 8, 213,000 of the Jan 45. So keeping the party rolling into January. And then number 7, the first of 2 puts in our top 10. 214,000 of the Nov 19 puts. A, dare I say it, normal strike out there. Number 6, 235,000 of the D's 45. So right back at it, listeners. Number 5, 241,000 of the Nov 47 halves. I was joking about this last week, but this is starting to get the whiff of it, the air about it. Some of the quote-unquote garbage paper that I was joking with KRIS about earlier in the show. We saw so much of it last year. We haven't really seen a ton of upside percolating into VIX, at least not this kind of upside, in a little while. So kind of interesting to seeing what's dominating the OI in VIX options right now. Again, number 6, 235,000 of the D's 45s. Number 5, 241,000 of the Nov 47 halves. We're all over the place, listeners. Number 4, 242,000 of the Jan 47 halves. Number 3, our second and final put in the top 10, 280,000 of the Nov 17 puts. I know a lot of you were playing around that 17 put strike earlier, so a lot of interest in that one. Number 2, 319,000 of the D's 40s, 4Os. And the number 1 size position in VIX options right now looks like the other half of the vertical, listeners, about 320,000 of the D's 35 calls. So once again, a lot of, shall we say, optimistic, outlandish, call it what you will, upside dominating the top 10. KRIS, it's not quite as dramatic as we saw last year when VIX was hanging out in the 30s and we saw par and above strikes dominating our top 10 in the VIX options size positions list. But it's been a little while since we've seen this much upside dominating the top 10 out there in VIX land. What do you think? Are we starting to potentially move back into another regime when the garbage calls are dominating the tape, sir?
I think we're going to need to get a little more fear or panic, or a little more of a move in vol to really get people to start reaching for that type of exposure. I think it's kind of hard to get that at like a 20 VIX, but usually when you get that repricing and vol starts moving, you get that sort of reach for the real wingy stuff. As of right now, I think the market just continues to discount the chance of a short-term crash. I mean, if you look at VIX futures, Nov and D's kind of, they kind of express that view because they're both so into the ground when compared to, Jan, Feb, and the rest of the term structure. So I think we're going to need a little more fear and panic before we start getting a reach to that type of tail stuff.
So what you're telling me, if I can read between the lines here, is that you guys at AMBRUS Group are not long 211,000 of the March 47 halves. That isn't you? No. But I do have a funny story for you. I do have a funny story. Maybe we could get it before the. Go for it. I always like a good funny story to cheer us up.
Okay. So, so I think you guys will get a kick out of this one. So, for I think it was maybe 2 months ago. Remember, you guys were talking about an SVIX call buyer. Remember these like weird like
the SEP 35s? That one?
Yes, that is the one. So, surprise. I guess legally we can talk about this because it's awesome.
That was you guys? You were the ones. We were making fun of that. In fact, our listeners loved it. They were writing in for months ahead of time saying, who could possibly be buying these 35s? I thank you because it made for a lot of great fodder for our show, sir. Our listeners ate that up.
Yeah. So I think it would be cool to explain, kind of why we had that. So really, when you're running, a book like our book, you think about slide risk, right? But then also you think about slide risk from like an opportunity standpoint. And one of the strats that we run are really around trading, the VIX term structure. And there are times where SVIX will trade off of NAV, right? So pretty much, you pretty much you could replicate, the same amount of vega that you could get in trading the VIX futures by trading SVIX. And really where we took that was, we expressed those calls was because if SVIX continued to go higher as we scaled our position lower, right, we didn't want to miss out on the quote unquote opportunity cost as to where the whole notional exposure should be in our portfolio. So that was sort of like a offsetter, just in case vol continued to go into the dirt. And we priced it out and we were like, SVIX could probably get to this range if this vol crush continues. So I listened to the show. Andrew and I consider friends. So I remember listening to the show and saying to myself, that's funny because that's us.
Oh, that's hilarious.
That's fantastic.
That is hilarious.
Our listeners are going to, and I will say in your defense, you almost got there. You got a couple of handles away. Our listeners started writing in. They were tracking that trade even more than us. They were saying, oh, these SEP 35s are going to be in play. I can't believe it. I think when you put them on, wasn't SVIX around 13, something like that?
No, I don't think it was 13. It was high. It was higher than 13. I'd say probably like maybe like low 20s or something like that, or maybe like high teens, but not as low as 13. But yeah, I think from a trading standpoint, the product is interesting because, like I said, it creates a couple of opportunities that run off NAV, and I would say the market makers for the option chains aren't really as I'd say it's not their first priority, right? So you could kind of get some mispricing in those option chains too, which make it pretty interesting to trade. Not really the best from a liquidity standpoint, but opportunistic, I would say. So yeah, that's kind of what that was about.
I just pulled it up, sir. You bought them back on March 20th when SVIX was 1409. So you do yourself a disservice. It was pretty low.
I stand corrected.
Nice. I forget. Did you guys sell those or did you went on the other side?
No. They just died on out. Like I said, it was more so to cover off, the slide risk opportunity costs, if the vol crush continued to go as we scaled out of one of our other positions. So that's what that was kind of about. But
I know you didn't need them, but towards the end, we shifted from rooting against them to rooting for them, just because they were the little underdog that could. When you put them on at SVIX at 14, I have to respect when SVIX is a 31 or 32 and these 35s are suddenly in contention.
Well, that's tail risk trading, right? That's how it goes. You bet one to kind of make 100, and the market presents some opportunities sometimes. Sometimes they kind of die on out.
Well, allow me, on behalf of all of our listeners, to thank you for providing us with fodder since March to discuss here on that show. Let us know next time you want to do some crazy, outlandish vol trades, because we'll be sure to discuss them at length here on the show, which is always fun. I wish I had a ton of outlandish vol trades to talk about in VIX right now, listeners, but we are kind of coming up against it, and it wasn't the most rock'em sock'em of weeks. The big 2 days, I'll just hit those two. Wednesday, 866,000 contracts on the tape. The big dog on Wednesday, our old favorites, the NOV 17 puts, 91,000 of those going up, so interest there, followed by 90,000 of the DEES 19 calls, 81,000 for number 3 of the DEES 19 puts. Number 4, 54,000 of the NOV 19 calls, so we're kind of all over the place here. And number 5, 46,000 of the NOV 20s. The other most active day was Monday. That's the only day we really threatened 1 million contracts, 987,000. So coming hot off the weekend, obviously a lot of literal weekend risk going on out there right now, so not surprising we'd see a bit of a banger Monday. The big dog on Monday, such as it was, 80,000 of the NOV 40s. So here we are, right back at it, listeners. Followed by number 2, 66,000 of the NOV 35s. Number 3, 65,000 of the DEES 25s. Number 4, 63,000 as well of the DEES 32s. Looks like some vertical action going up there as well. And number 5, 40,000 of the Feb 40s. Interesting stuff. Mr. Meatball, really quickly, any big prints in VIX options catch your eye this week, sir?
Not off the top of my head. Let me see what's happening today, because I would expect today would start to get some interest. And, not a ton, just like reversals today. and some small upside call buying, you would think they would be a little more interested with everything going on, but maybe it's part of the reason the VIX is so frothy is because everybody's already in. Biggest trade on Thursday was a 20,000 lot call spread of the 2732 in Nove. Biggest trade on Wednesday was, they did a 1917 risky, but that about 50,000 times. That was bullish. And they bought the on Tuesday, you had 10,000 of your Feb 90s going up, and somebody did buy 26,000 of the Jan 40s on Tuesday. Monday, again, biggest trade. That Monday was our biggest active day. We had a 64,000 lot buyer of the DEES 2532 call spread, and we had a buyer of the November 3540 November 3540 call spread. Do that 58,000 times, along with a 30,000 lot call buyer, the Feb 45s. Or no, it was a 1x2. It looks like they bought Feb 40s, sold Feb 45s on a ratio. Kind of an interesting one. So, Monday was really the day. Everything else kind of nothing.
Kind of nothing, yes. Speaking of nothing, Chris, ever since your SVIX went away, it's been kind of boring. SVIX right now, it was unched when we kicked off the show. It's now back down to a 23, so down 1 point from where it was this time last week. And a heck of a lot of nothing going up today, 1,100 contracts. The ADV around 5,100. So, Chris, we need you to put on some more paper out there to make SVIX exciting again. That said, someone might be stealing a march from your playbook here, or maybe it's you coming back in for more size. I don't know. But the top size position right now in SVIX are 6,733 of the Nove 28s. I will say the Nove 28s don't quite have the same level of optimism, the same level of magic for our audience as, let's say, the SEP 35s back when SVIX was 14 versus right now. SVIX at a 23, yeah, we could easily see 28 again, so not quite as exciting. So what I'm saying, Chris, is you need to get back out there and put on some more fun paper for us to parse here in SVIX.
Yeah, we'll see what we can do. But yeah, no, SVIX has been quite an interesting product. Like I said, if you're trading these ETPs, you really could just be trading the futures. But I think the ETPs offer something interesting, from like a math perspective, and then also accessibility, and then the option chains are pretty fun to trade. So yeah, SVIX is a good product. I mean, it's been absolutely demolished. I think it got from like 33-ish to all the way down to like 22-ish, wherever it's at today, 23-ish. But yeah, enjoying that product.
Well, since we're talking about SVIX, we have to talk about the top story that in the world of vol the last few weeks, which is its sister product out there, which is UVIX. Man, what a beast. What a beast out there just since this post-reverse split. I know you mentioned you trade SVIX. I'm curious, Chris, you had to be watching just the monstrosity that is UVIX post-reverse split. What are your thoughts on this new monster that has gone from languishing around $2 to now whipping around 7 handles at a clip around $40, Chris?
Yeah, I think it's fun. We don't really trade that one, but I do think that one is fun. It's the closest thing it's the closest thing I guess we're going to get to TVIX, right? I mean, I remember TVIX was a complete beast. That thing during COVID was raging. So it's definitely a fun product. I do question if they should have reverse split it higher because the bearish drag is going to destroy that, and then obviously the roll down is going to destroy that. So I do question if they're probably going to have to reverse split it again in well, probably not 2 months, but probably, maybe sometime by June or something like that, they'll have to reverse split it again.
It's got a positive carry now.
Yeah,
so
it's looking juicy.
This thing could be off to the races. We may be saying they reverse split it too much if vol goes up, if vol keeps going.
That's what I was about to say, because I had the same thought as you, Chris. When they first announced 10 for 1, I was like, I really would have liked 15 or 20 to 1. And then all of a sudden we got a UVIX of a 40 handle. And I was thinking maybe I should have been careful what I wished for, because I don't know if anyone was prepared for this monstrosity to be unleashed upon the market. In fact, our listeners are getting in on it. We have one of our pro members here, Ravi Brewster. He chimed in earlier this week saying someone brought the heat 4,022 times today in UVIX. They bought the OC 39 calls expiring today, and they said the beast has been unleashed. So yeah, if they are, I'll have to go look and see if those are still open. But yeah, if they bought the OC 39s, they're looking pretty good right now, because UVIX has swung, as it is wont to do, a few handles just since we've been talking. It was at about a 41 when we kicked off the show. That puts it down about, I think it was about a point on the week. It has swung to north of 43 right now, so it's up 2 points. So those 39s are still looking pretty good. I looked here, the top positions coming into today was a whole bunch of pre-split adjusted stuff. So I'm assuming, Ravi, they might have unloaded those. But Mr. Meatball, did you notice that print going up in UVIX? And what are your thoughts on the beast that continues to rampage in the vol space, sir?
I mean, this thing is a beast. And if you like trading implied volatility, you've got to be all over this thing. Just today, I mean, look at the swing this thing has had, Mark. This thing was $37. It's now $44. Just as an FYI, vol is off to the races. I'm excited. I don't know how close you're going to be, who's got what, but man, this thing can swing. I mean, the average in the since the reverse split, it has had a day where it went from 31 to all the way up to 41. It's had a day it went from 36 to 42. It had a day it went from 46 down to 37, 36 up to 42, and then today 37 up to 44. So this thing is a flyer. It is a absolute beast to trade.
Yeah, I might have to rescind my wish for a 15 or 20x reverse split. I don't know if the delicate constitution of our listeners can handle a 60 handle in UVIX. I don't know if the world is ready for that. And speaking of our guesses, sir, I think it's that time. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Oh, we are whipsawing all over the place, listeners. Crystal ball time, and right now, as I just ran VIX, we are at a 2163, so it is looking frothy. And guess what, listeners? I was at a 21 double, a 2155, so I am exactly 0.08 away. So my goodness, that gives me yet another bullseye. I will take it, especially if VIX getting a little bit frothier. You know, when it's hanging out in the 12 to 14, 15 range, a little bit easier to get a bullseye, obviously. Now that we're getting a little bit juicier, these are getting harder to come by. So I will definitely take my bullseye. I thought I was kind of optimistic. Then I heard Rich Excel's guest last week on the show. He was at a 27.72. So he blew my optimism for vol out of the water. Thankfully, that did not come to pass. I don't know if the world's ready for a 28, almost a 30 handle VIX again so soon. And then Mr. Meatball, your palindromic nonsense, you were fading the heck out of vol at an 1881. So no joy for you. Our producers servicing some of the closest guesses from our listeners. You know, we got 24 handles, got a bunch of 22 handles. Some of you were close. Frank, if we had waited, if this segment was a little bit later, you might have won here. We also had Paul Panis, I think. He was a little bit north, 22.25. Again, if this segment was a little bit later, both of you folks might have been in the running as well. The rest of you, Queen, you're a little bit low this week, 21.20. So unfortunately, no joy for you. Producers will go through all of those, listeners. And if there are any other bullseyes out there, we'll be sure to follow up with your fabulous prizes. All right, I get a bullseye. That means I get to go last. I'm going to choose to go last this week. So, Chris, as our guest, You get the joy, the dubious honor of going first. What do you feel for this time next week from a vol perspective, sir?
Yeah, from a vol perspective, this time next week it's interesting because we got some interesting data that's coming out, and then you also got Fed next week, and then you got end of month. So you're baking in a couple of things there. I'm going to say vol moves higher, but then settles back lower. So I'm going to go with 21 VIX. I know we're over that right now, but I think where we're at the exact same time next week, I think vol would have went higher, but then kind of came back lower. So I'm going to go VIX 21. Final answer.
That's the challenge. It's a moving target. Where is VIX going to be right at this time next week? Not at the close, not in the morning. There's been many times, Chris, where I've been right in the morning and then wrong by the time the show comes on and vice versa. So it's a fickle mistress, but a 21 even. All right. I see what you're putting down there. 21 handle worked well for me this week. Mr. Meatball, same question for you, sir. What are you feeling for this time next week?
I mean, based on the price action today, the way things are, we do have Fed speak next week, and we'll have non-farm payrolls out by then, which could throw a wrench in the VIX either way. But let's go crazy. What was it? He said 21 even?
21 even.
Mark, you're going to love this one. 22-22.
Going a little bit juicier. Interesting.
Super palindromic.
An easy palindrome to put together.
And it's also an anagram.
Yes, you're right, it is. So there we go, 22-20. Now you're feeling juicy. I was actually about to write down, as you were saying that, I'm feeling a little bit frothier, listeners. I'm going to say 23-25. That's the highest I've been in quite some time in my crystal ball, listeners. So I'm feeling a little bit of juice, a little bit of froth. So that's your market for this week. 21 to the dark side for Chris. 22-22 in the middle for the Meatball. I'm taking the top spot. I'm playing the Russell Rhodes role this week. 23 1/4. Unfortunately, that music means we come to the end of another epic sojourn in the world of vol. If you're listening on the on-demand side, that will conclude your broadcast week with us. So thank you for joining us. I will be back in about an hour to break down the entire week from an unusual activity perspective. Our buddy, the options guy, Mr. Brian Overby, will be joining us there to help me break down all the crazy paper we have going up. I'm sure he's got some fun trades in his back pocket he wants to talk about as well. So if you're on the pro side, stay tuned for that. Should be a fun time. Of course, if you're not on the pro side, what are you doing? TheOptionsInsider.com/pro. You join up there, and then your broadcast week doesn't have to end with volatility views. A lot of great fun waiting for you. And Mr. Chris, great job on the show today. I'm glad you have finally had the chance to reveal yourself as the owner of the hotly debated SEP 35s. And if folks are intrigued, they want to check out what you're cooking up in the land of the AMBRUS group, where should they go? What should they do?
Yeah, they could go to www.ambrusgroup.com, or you guys could follow me on Twitter at KSIDIII. I'm quite easy to find.
There you go. Give them a follow on the old Twitter machine out there, the X, whatever they call it these days. And Mr. Meatball, same question for you, sir. Where should folks go if they want more volatility goodness in their life?
Go to optionpit.com. I'm about to break down what's happening in the markets as soon as we're done here and going to be putting that out. So you don't want to miss it.
All right, don't want to miss it indeed. Optionpit.com. Speaking of missing things, I'm checking the chat now. A lot of 22 handles coming in from our pro listeners listening live. 22-20. Oh, Queen's at a 22 handle, 22-30. So she's usually pretty prescient. Nichols also 22 handle. Frank 22 handle. A lot of 22 handles flying fast and furious. So it seems like a lot of our listeners are feeling a little bit more froth coming into next week. Remember, listeners, if you're listening after the fact, get your crystal ball predictions in today. Doesn't count if you're putting them in later on this week or next week. That's not fair to everybody. So get them in today. You can guess VIX with the rest of us. And hey, if you come within 1/10 of a point, you too can win fabulous prize. It's just a fun time being had by all. That is going to do it for us today on the On Demand Network. Thank you for joining us throughout the week. Back again for all you pro folks in a little bit for Options Oddities. Then back again on Monday, of course, for everybody with a little bit of the old option block and the crypto rundown all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.